Good afternoon, everybody, and welcome to this week's macroeconomics analysis session for September the 4th, 2015. Jeff and David with you here this afternoon. Good afternoon, Jeff.
Good afternoon, David, and everybody listening.
We've just come back from our Elite Wealth Academy up in fantastic Sanctuary Cove. It rained the first day we were there, but then after that, Jeff, it was weather was perfect, wasn't it?
It was, and from someone based in Melbourne, I think the nightly highs or daily highs in Melbourne were about the daily lows in up there, so it was very nice.
Yeah, it was a great time. Fantastic feedback, and thank you very much to Stuart McPhee for coming along and providing some outside experience as well. But more importantly, thank you very much to all our members who came along, and feedback from a lot of the people, Jeff, that some in fact saying it was the best academy that they'd been to yet, and that was from people who'd been to 3 or 4 academies in a row. So very positive experience, and I think a great learning opportunity for everybody who attended. All right, let's get the show on the road. As per normal, our disclaimer: the content of this presentation or any other Elite Wealth material does not constitute a recommendation, nor does it take into account your investment objectives, your financial situation, nor particular needs. So before making an investing decision based on the general advice presented in any of our presentations, please consider whether the advice is appropriate in light of your financial circumstances. All right, the week in review, Jeff. A few things happening in Australia this week, particularly the first Tuesday of the month, so I'll let you explain that in a moment. Some news out of the US at the moment over there, the Fed meeting with their annual symposium in Jackson Hole in Wyoming, I think it is. Is it Wyoming?
Yes, I think so,
it's
yeah.
Wyoming, yeah. Some data to come out of the US, China, and also the Eurozone this week as well. So, Jeff, Australia first and foremost.
Yeah, look, the big news, although it was no real news, was the RBA keeping rates on hold at 2%. Yeah, look, there was not only was there no change to the rate, there was almost no change to the language at all, and actually up in the academy during the week. Right before 2:30 on Tuesday, we had the Aussie dollar up on the chart.
That's right.
And about a minute to go, I said, look, I've got a sneak peek of this month's announcement. And I read it out word for word. And of course, what I was reading out was last month's. Once we had the new one out, reading them back to back, certainly the opening and final paragraphs were identical, which really shows that there's no change in the language. So RBA is happy to keep rates on hold, but with... Well, let me go on to the next couple of points and see if there's any chance of that changing in the future. So, GDP came in at 0.2%, the worst numbers we've seen in about 2.5 years, I think.
Yep.
So, obviously, the Australian economy on the back of a weak mining sector, also fairly sluggish, some other parts as well, is not performing all that well, weak terms of trade, and I'd expect some... the weak GDP figures to continue. Australia doesn't have a great outlook at the moment.
Yep.
Retail sales also really badly disappointed.
Very bad. Yeah.
I wasn't as surprised as the rest of the market seemed to be, because the previous month we got a huge number, a June figure that were helped by those tax incentives.
Yep.
From the federal budget.
Yeah.
So we saw a really big jump in June, and then things actually go backwards in July. So everyone thought, oh no, the party's over, but that kind of thing often happens. When you do adjust it for that little June-July anomaly, the sales are still a bit weak. So they weren't great numbers, but probably not as bad as people were making out. So overall, our trade balance did shrink a little bit. Deficit shrunk a little bit on the back of higher resource exports, volumes and prices. So overall, look, it's to be honest, a fairly bleak economic picture in Australia, and certainly adds weight to the chance of the RBA having to cut further at some stage.
Okay. So just correct me if I'm wrong, Jeff. GDP, is that the measure that if we have 2 negative quarters, we're officially in recession?
Correct. Yes.
It is.
2 consecutive negative quarters.
All right. Now, in percentage terms, it's not a huge amount from 0.2 to 0.4. Is that statistically, meaningful that it's dropped that much, or is it just an aberration on a quarter by quarter basis, or what do you think?
No, look, that's a fairly sizable miss. With GDP, it's made up of a number of different figures,
Yep.
and we normally have a lot of those parts of the puzzle. So when it gets to estimating what GDP is, the market normally gets it pretty close.
Yep.
Normally spot on or 0.1 away. When you see something 0.2 or further away, it doesn't sound like much. It's only like 1/4% or something. That's certainly noticeable and material. So that they're particularly bad numbers.
Yeah. Okay. Right. Over in the US this week with the Fed meeting over there, some data coming out. Obviously, the manufacturing side of things, non-farm employment trade balance. What do you make of the numbers there, Jeff?
Yeah, a bit of a mixed bag this week. So just looking at those PMI figures, manufacturing was a bit weaker than usual, but non-manufacturing was weaker than expected, and non-manufacturing better than expected. So they pretty much cancel each other out.
Yep.
Certainly manufacturing over there has been struggling a little bit recently with the strong US dollar. A couple of other employment ones there. So we had the ADP non-farm, so the private jobs data came in weaker than expected. We've got the all-important non-farm payrolls tonight.
Yep.
I think the current expectation is for about 210,000 jobs to be added for the month. If this is a really, they're important every month. This is a really important one to keep an eye out because we've got a Fed meeting in a couple of weeks, and this might be one of the final pieces in the puzzle for the Fed to possibly justify a rate hike next month.
Yep.
In my mind, and I've been saying for a while, I don't think there's much chance of seeing a rate hike this month. I think we're likely to see it in December. I think the Fed is going... Janet Yellen said, keep your eyes peeled for one this year. I think they'll push it back to December as much as they can. And if anything, it could even roll off into next year. I think at the moment there's about a 30% chance, the market's pricing in a 30% chance of a rate hike in a couple of weeks.
Yep.
Don't think that's coming.
Yep.
The only other item there, the Jackson Hole Symposium, we had some of the heads of the individual reserve banks in America, and generally speaking, the language was hawkish, meaning they were talking up the chance of increasing rates. So certainly the brains behind the Fed are, really shifting towards moving those rates higher, but it's not something that's necessarily going to happen right now, and it's going to happen very slowly.
Yep.
Over in China, final PMI came in a smidge higher than the flash numbers. The provisional numbers doesn't really mean too much. And in Euro, I've been saying for probably a couple of months that I expect the ECB and the Bank of Japan to announce more QE by the end of the year. Probably, I said sort of in the third, towards the end of third quarter.
Yep.
So I still maintain the next couple of months, I think we could see some more QE out of Europe and Japan, but nothing changed officially.
Yeah, there was a bit of a statement there on the back of that press conference suggesting that there may be more QE if deemed necessary. So I guess they're just sort of waiting and watching at the moment, but they've still got something up their sleeve if need be. All right, well let's perhaps just go and have a little bit of a look at what's happened on the markets in the last couple of weeks. There's our XJO, the ASX 200, and earlier on the year, after our terrific rise up, we formed this channel of sort of downward moving price action. And you might remember that we sort of broke out of there only to come back and retest the upper limit of that downward sloping channel. We moved back up, we broke through, and all the while this was happening, our stochastic, our market risk indicator, moving below 60 quite some period ago, way back in June. So since that point in time, our market has really slipped away, and particularly in the last month, has really sped up towards the downward side. Important to notice here, Jeff, I know as well from your point of view, you do look at technicals from time to time, but these old areas of support, now that we've broken through those, typically we come up and retest, and we've been talking about this in previous weeks, and we really have. We've come back up and we failed at that point, which is a pretty ominous sign for our markets. We've had a succession of downward days. Today, when the market opened, it looked like we might get a little bit of a move to the upside. The data hasn't come through just as of yet, but our market looks like it's going to close in the red today as well. So certainly particularly bearish at this point in time. And really, once we get below 60, we don't want to be adding too many or any more positions to our existing portfolios. Those that we've got in there, we simply maintain, we trail the stops as per normal. And surprisingly, or perhaps not too surprisingly, I suppose when I think about it, is that the Australian portfolio has over the last few weeks by and large held up a little bit better than the US portfolio. The Australian stocks that haven't been stopped out have held up very, very well. So there's certainly still some reasonable interest in those stronger performing stocks. Certainly there have been some stop outs along the way, but by and large it hasn't been too bad.
Yeah, I think particularly in Australia, a lot of obviously the overall market has been very poor, but a lot of the weakness has been driven by the financials and the mining material sector. So the fact that the portfolio's had some outperformers, and we've had reporting season as well. So if you get onto a good stock that has some strong fundamentals, and is really in favour with the market, that can continue going up even when you've got a fairly ugly market, or at least maybe not continue going up, hold up certainly better than other things. So there's even situations like the recent market conditions, you're always going to get stocks that are outperforming and underperforming.
Yep. Good point. So we'll just go across and have a look at the US at the moment. Again, you look at this movement down, and it's a very, very violent move, and it's one different aspect to the between the Australian market and the US market is that the US market probably historically is prone to more volatility than the Australian market, and hence it's also a probably the world's biggest market in terms of options, and options in the US are priced on a number of factors, and one of those is volatility. And certainly you can see, since recently after moving out of this sideways pattern, how quickly and how sharp the sell-off was. And again, once we got below this 60 level, and whilst we were still within this broad ranging market, it's what effectively we call divergence between our momentum indicator on the bottom, which is the stochastic, and price, which is going sideways, and momentum really starting to weaken prior to falling out of this sideways moving channel. So certainly in this particular occasion, the divergence was giving a bit of a clue as to where the market may go. And again, since moving down very, very rapidly, we've come back up to test a previous level. Now, we haven't quite got back up to the previous top or bottom of the box per se, but these previous levels historically, way back at the beginning of the year, we've come back to retest those, only again to fail at those particular points. Looking like we're trying to retest those previous levels again, failing last night, a pin bar there. Things looking a bit bearish at the moment, Jeff.
Yeah, just interestingly, the Aussie market, the rejection of that previous support level was also from January.
Yep.
And the Aussie market actually rallied quite a bit more in February, March, so sort of went beyond those lows, and then it's come back all the way. The US market, it's travelled quite differently to the Aussie market this year, but again, still pretty much a textbook rejection of those earlier support levels.
Yeah, absolutely. We'll just go through and have a look at a couple of other markets at the moment. That's the German market. I haven't done a lot of analysis on this at the moment, but again, falling fairly sharply, sort of coming back up to previous levels, and I'll just draw a quick sort of area of resistance and support where we're trying to move back up to those particular levels at this point in time, and haven't yet gone back up and closed above those, so still got a lot of work to do. The Japanese market, by comparison, certainly has bounced back up to previous levels. It's failed at those levels and started moving back down again. So certainly hasn't been a good size for the Japanese market. Certainly if they invoke on a little bit more QE, then that might be positive for that particular market over there. I think they were the main ones that I sort of wanted to have a look at. The Chinese market, obviously extremely volatile at this point, and having a bit of an impact on global markets as we speak. The Hang Seng, that's the Hong Kong-based market, is certainly well off its highs in recent times as well. Certainly, just having a look at this particular chart, we've got some key levels here through what was old support levels. Old resistance levels once broken tend to become support in the future, and acted perfectly there, acted perfectly again. And since that time, once we had the price price can't come back up and retest those previous levels. So certainly weakness in a lot of global markets at this point in time. We'll just jump back into the slides now, Jeff, and have a look at what we've got on the cards for this next week. The week ahead in Australia, a fairly busy week in Australia, but not so much globally.
Yeah, look, certainly in Australia, starting off with the job ads, a lot of attention usually gets paid to the unemployment, the jobs numbers and the unemployment rate. Whilst it's not technically as important, I pay a lot of attention to the job advertisements numbers out of the ANZ. They kind of tend to predict what's happening and where the employment market might move in a couple of months, because it takes a couple of months or a few months from an ad to go in the paper, or really the internet these days, to a job being filled. So that's fallen in the last couple of months. It actually went backwards last month, so contracted. So I'd like to see where that goes. And it is connected as well to business confidence. Obviously, if businesses are confident, then they'll do more hiring. And business confidence was really strong for sort of 4 or 5 months, and then fell back last month. I'd like to see that bounce back. I've got a feeling it actually will bounce back to its recent strength. A couple of speeches from RBA governors next week. There's sort of 2 or 3. The main one is an address to an economic forum, and I think we'll see some more comments about the need for structural changes, and the government and both sides of politics sort of pulling their finger out and working on productivity. Consumer sentiment has also been a bit choppy and had some poor numbers recently, so I see less of a reason, less of an expectation that the consumer sentiment data is going to be strong. And then a few other bits and pieces, obviously the unemployment data. I think even though the jobs market has held up fairly, quite impressively actually in the last 12 months, probably much better than everyone, including the RBA, expected. It's whether it's this month or coming soon. I think we'll see towards the end of the year the jobs market will probably start to weaken a little bit. I think it's just inevitable given the fairly weak economy.
Yep. Typically, just a question off the cuff there, Jeff. Melbourne Cup Day, first Tuesday in November, coincides with RBA deciding what to do with their rates and things like that.
Yep.
Historically, on Cup Day, have they raised rates or lowered rates?
It normally depends what area, which part of the cycle they're in. So it's not that they... I think it normally works out with how the RBA governors have gone in race 6 and whether they need to make some money back or something. But no, look, it's not so much whether they raise or lower in November, but November is one of those months that they do typically move one way or another. So it's fairly common knowledge, and I sort of follow it quite closely, that February, May, August and November contain most of the RBA's rate moves, and that's because it comes 1 month after CPI data, inflation data, and that's one of the RBA's most important consideration. So they generally, if they're thinking of moving, in this case probably lower, they'd wait. Inflation data comes out pretty soft. Then in November they say, oh yeah, look, we can probably cut rates. And certainly most of the papers tend to run with the headline odds on, for a
some rate
cup day rate cut. So the journos love it certainly. But yeah, I actually said probably going back to May that I thought the rates would be on hold for about 6 months. The earliest I can see them cutting is probably November. So there's a good chance we could see a rate cut in November.
Okay. Some more data out of China next week.
Yeah, trade balance actually had been fairly strong and took a bit of a hit last month, considering they have intervened in the currency market. That'll play around with the trade balance a little bit. Might be too early to have a full impact, but certainly that might help the surplus sort of get back to its previous highs in China. Consumer sentiment and PPI data out late next week, I think. And I've picked consumer sentiment fairly well the last 6 months just by going the opposite of what it had done the previous month. So it tends to be bouncing around. So I'll pick that one to go back down this month. But yeah, look, it is quite zigzaggy at the moment. There's no sort of clear trend.
Yep.
Canada's an interesting one. They've got rates at 0.5%. Odds are quite high that they're going to keep rates there, but their next move will probably be lower. So I think we could see another. I don't think their rate cutting cycle is finished yet.
Yep.
Similar for New Zealand. They were flat at 3.5% for around about a year.
Mm-hmm.
The last two meetings they've cut by 0.25%.
Yep.
And I think we'll see another rate cut by 0.25% by the Kiwis this month.
Yep.
Next week.
Okay. All right, so certainly next week a fair bit of news coming out of the Australian market in particular, so it'll be interesting to see what impact that has specifically on the Australian dollar, and whether or not our market, depending on the information coming through, can rally on the back of any of this information. Keep our fingers crossed for some good news on the jobs front, and that hopefully businesses and consumers are feeling confident. Certainly, I think our retail sector could do with it. Needless to say, next Monday, as per normal, 9 a.m. in the morning for the Elite Traders Club members. Just a reminder that at 9 a.m. we will have the weekly analysis session. Hoping that my Beyond Charts is all fixed up over the course of the weekend. I've had a few data glitches whilst I was away at the academy, so working feverishly in the background to bring that to you. Failing that, if I don't happen to do it, then I'll just ask the audience. I might ask the audience a question, Jeff, just like they do on Who Wants to Be a Millionaire, and see if they can pose some new setups, etc., for any of the watch list, should that occur. Anyway, that's it from me, Jeff.
And it from me.
Happy Father's Day this weekend on Sunday. Jeff, this will be about your 4th Father's Day.
Yes.
Fantastic. So have a great Sunday with your family, and everybody else having a great time with their families over the course of the weekend. Bye for now.
Thank you.